Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, July 23rd, 2020. The theme of this video will be one down, five to go. I'm going to just touch relatively briefly on these market-leading FAANG stocks that I've been harping on lately. Talk about the markets, the indexes. We're at some levels I wanted to point out right now, some support levels, but we've also received some sell signals today. I kind of want to expand, my thoughts a little bit on that. I get the charts out this morning. I like to do that. I know most of you prefer that, particularly in the morning. You don't have time, especially if you have a day job or you do something else, to listen to a video. So I tend to get the charts out in the morning and then follow up videos throughout the day. So one down, five to go. This is Microsoft now out of the way. First of the big FAANG stocks to report. Remember, they reported last night. And so far, you can see the market's reaction. It's had plenty of time, down 4%. So one of the bigger drops in recent months, really. But it's not an extreme move. And right now, as of now, really no technical damage. About the only thing we can say is Microsoft has remained below the bearish engulfing candles from just over a week ago. I'm referring to this candle right here, and never took it out down below, but still needs to take out the 201.35 support and these uptrend lines. It's down today, as are most of the other FAANGs. Let's run through those really quickly. Apple reports on July 30th. Remember, all the FAANGs after the bell. Very clear sell signal. Somebody asked something on the front page today, and I replied in a comment. You have to take breakdowns that occur a week or two before a stock reports earnings. You have to take it with a little bit of grain of salt. Why? Because if we were well in between earnings, you would say that is as good as a breakdown gets. Solid red candle. And number one, first of all, it is a breakdown. So take it for what it's worth. It's just when you have earnings reports, anything can go the other way. If Apple somehow blows the cover off the ball, surprises to the upside, or whatever reason, people just gobble it up after earnings. So my point is that the odds of getting a breakout or a breakdown that proves to be a whipsaw or a false sell signal, if it happens right before a company reports earnings, again a week or so, it increases those odds, is what I'm trying to say. And now, with all that being said, and I went on to say this in that reply to somebody, as I said in a recent video, it's been my experience that much more often than not, if a chart, despite the current trend, make no mistake when I say a stock has a bullish or bearish technical posture, that means nothing to do. We're talking about the trend. Anybody can see that since March, Apple's been in a bullish trend. There's no arguing that. And there's a trend line and everything else right there, although that's taken out today. But that doesn't mean that the trend is now bearish. It means you have a sell signal, which means most likely, at least for the near term, maybe even longer term, that uptrend is likely ended. Okay, so the bearish technical posture are the divergences, the overbought conditions, extreme sentiment readings, everything else that says, yes, despite even 2 days ago, yesterday, before the sell signal, the technical posture of Apple was bearish. And so where I'm going with that is, although breakdowns that do occur just before earnings, and this has potential to change, have a higher risk of failing, take this breakdown, couple with the bearish divergence, and I would say that we're still probably going to hit those targets that I laid out yesterday in these FAANG stocks. First one on Apple being 354.48, and so from where it was yesterday before the breakdown, that was about a 9% drop, and then about 15.16. That's my preferred target right now, down to about 327. And again, so far so good with these sell signals today. So there's Apple. Remember, July 30th after the bell. Here's Microsoft, which I just went over today. Despite it being down, I have alternative trend lines here. This yellow one being the benefit of the doubt. There's quite a few. The trend's not as well defined. That's why you're seeing these multiple trend lines in Microsoft. But again, there was, if anything, a sell signal there. And this is the first horizontal support level that I think would open the door to more selling. We're not far from it now. So I wanted to point that out as I'm going through the video. I'm looking probably, here's what I'm going to tell you right now. I think that we've seen the lows for today, despite these pretty impulsive moves down. Why? Because 5 more FAANGs report. I don't know. Whatever Microsoft did must not have been horrible. They were down immediately after the report. You can look at the trades and you click on after hours, edit chart properties, go to pre-post data, show it here, and you can see what happened right there. I'll roll back a little bit. So there's last night's reaction, and I always say they're all over the place. This was the market close. Microsoft dropped, regained almost all of that drop by this morning. This was today's open. This shaded box here, you can see this is last night's after hours and today's pre-market session right there. Here's your daybreak line right here. That's early this morning, and you can see the stock almost got back to where it was yesterday. So this is that thing I talked about. The markets now had time to digest the gains. That big boys, the institutional players, step onto the field here. This is a lot. There are some institutions that can trade there, but big multi-billion-dollar funds, they need liquidity to get in or out of a stock. And so that's what it shows you, what's happened since the market opened. There was a little initial pop, and they've been fading it all day long. And again, just to be clear, I think there's a decent chance that we're close to, or maybe have seen the lows today. Maybe a little bit more downside because Microsoft's coming up on support there. But make no mistake about it, I think we're going much lower in the coming days to week. And I think as you see the rest of these FAANGs get out of the way, whether whatever happened today starts to scare those people still holding Apple, Alphabet, and Facebook, and Amazon, and they start to take profits ahead of those earnings or not. So I guess the easiest way to say, look, if you're of comparable mindset that I am, you might not want to try to cover a short if you took one on those breakdowns today, and I'll get to that in a second because we had a clear sell signal. Those setups I laid out on the futures this morning, both of those, ES and NQ, clearly triggered sell signals. Very objective entries, plenty of time to get in today in short. After those setups were posted, that's when the breakouts occurred after, and we'll get to those in a second. Amazon, down today, but still above the recent lows. You can put a line right here, and I can say that's a level I should have had on the chart, about 29.43. Remember, I said recently, this of all the FAANGs had the most bearish chart to me. You had a bearish engulfing candle at the highs, textbook breakdown as well of an uptrend line there, little wedge, divergent high, a bunch of follow through red candles. You had some wonky thing go on here the other day, last Monday, or the Monday of this week, but so far we never took out the top of the bearish candle. We're moving back down, but to really get the party started, you have to take out 29.43 and this trend line, which also sits right about on that 27.86-ish level. So that's kind of the magic number right here for Amazon. Should do the trick. This will certainly help. That'll probably open the door for that move down. A drop there of another, I don't know, that's probably 5% maybe. Let me see. Yeah, 5-6% somewhere. And then that would take us down to my target down there, minimum target of 24.70 on Amazon. And again, there's a lot in the chart that supports that. Alphabet, divergent high, no real clear trend line other than, as I covered, again, I've covered all these recently, probably shouldn't even be spending this much time on it. You can catch up on those old videos. Breakdown, back test, and a rejection off there, but we need to take out this level here. So here's a common theme. Today, some big moves down, but no major technical damage. Apple's only one that had that clear sell signal, and it still has about a week to go before they report out. That's the other share class of Alphabet. And then Facebook is at support now. So you do have some of these FAANGs either at or coming up on support. There's 232.44. Next level is 222.78. Again, given the divergent high, everything else, I think it'll get there. But you might see some dip buyers step in soon and either hold things up. I would say this, if I had to guess, this is a micro call. I don't mind giving these. You're bound to eat crow when you try to give these micro calls. But if I had to guess, we'll hit this level probably before they report, and probably take it out after that 222.78. So you've got until July 29th, and I don't know. Again, micro call, little bounce here today.
dip buy or step in today, buy up into the close, and then at some point soon we take that down. All right, let's see what helps to support that. Okay, so this morning we're going to go to this the charts I'm watching. I posted started working on those before the market opened and in pre-market, and then they were mostly futures, or all futures. And the first one here was ES, and ES, very clean, clear chart. I'm going to zoom in a little bit. If you have a scroll wheel on your mouse, just click and you can zoom and pan around, get look at all the detail in the chart. So we'll put it right here, and you know, not to oversimplify things, but it's, you know, pretty simple stuff. Look for these divergent highs, wait for the sell signals, watch, rinse, repeat. Divergent high, sell signal, boom, there's a short trade. Divergent low, your buy signals right here on the breakout of this downtrend line. There's your rally. Divergent high, correction. Divergent low, rally. Divergent high, correction. The divergent low was right here. There's your divergence line, rally. Divergent high, and that's it. So this is your next sell signal to come on a break of this trend line. That was this morning, that was then, this is now, and this is it. So zoom in a little tighter, same chart. There's your sell signal. It was impulsive, everything you see, but here it is. We hit it 32.25, 41 or so. We're round that off because this one trades, you know, in quarter point increments, or was it tenth of point, whatever it is. But that's support, and there's a little momentum fueled overshoot. So again, that's why I think today probably the lows for the day. Next sell signal comes once that level goes with conviction. Then we move on down to my next target at 31.90, and so forth and so on. So maybe a back test of the trend line wouldn't surprise me, something like that, kind of leaning that way. And so if you're an active trader, you can, you know, game reverse if you shorted today or came in short, cover. Or if you're not a very active trader and you think we are going considerably lower, it's not worth it to try to game a little micro bounce because like I said, the bearish evidence today has only mounted. In fact, we had, you know, some sell signals for the first time in a while. The sell signals that we were waiting for with this divergent high have now triggered. So again, you know, we move on down from here, whether we bounce or not first. Okay, in the next chart, the index that's been leading everything right here, NASDAQ 100. Nice, thick, clean, white trend line, very well defined, with the sell signal come on a break of it. We could have tested it one more time, and if we did, we would have put up, made a divergent high. And who knows, maybe we'll snap back above it and do that. And if we do, if these prove to be whipsaws because of everything I just talked about in the beginning of the video, 4 of the 5 FAAMGs haven't reported yet. Breakdowns that occur immediately before earnings have a higher risk of proving to be false, you know, signals, whipsaw signals. And so if a few days from now we're up here, this is what I'll be talking about. It was alternative scenario. That's why I used the lighter color, you know, kind of faded arrows. That was my preferred signal scenario. That's why those arrows are a little bit brighter in color. Here, you can see that there. And let's go to the chart. That was, again, this morning's chart taken at whenever that was. These charts always time-stamped just before the market opened. And boom, there it is. This is the updated chart. Sell signals don't get any more clear than that. That's what we call an impulsive solid break, solid close below there. Parked on that first 60-minute candle, parked on that first support at 106.72 or 10.672, and with a little kickback rally, you can make it out there, and then boom, we hit there. So that's why, you know, that's where I've, you know, as an active trader in my active trading account, covered in reverse just to play a little bounce, maybe get a bounce into the close to where, again, hard to say, probably up to maybe here. That was resistance right there, was support, now resistance at most up to the trend line, and if so, that would be an objective shorting level back to a 10. There's a price support there, or former support, now resistance, 10.773 or so. And now this market is very heavy, very, very heavy. It's gotten very overbought. It's disconnected from fundamentals. And so, you know, it is very possible we don't bounce that far or bounce at all. Well, we've already had a little bit of reaction, which is common right there, meaning a small bounce, little consolidation really so far. And is still where I think we go in the coming days. It's just what do we do first? So again, I'm leaning towards that little bounce scenario and then more down. And again, they may step in and buy this dip. That's been the MO for months now. So I'm very much open to this. And I may just take, in active trading positions, just trail them up. Let them run up with trailing stops. That way, periodically raise the stops. So if we do go on to that marginal new high, which again will give us the divergence like I drew out earlier in the, this morning would look like this. The arrow, imagine that's a straight line, just your divergence line. And this would be price, run up, slightly take out that new high, put in negative divergence, and set the stage for an even bigger drop. And if we did recover that trend line, that would fit with that, because that would be a whipsaw signal. So all the shorts that shorted here today would get squeezed out, start to cover when they realize the trend line's been regained. Bulls would pile back in, and that'd probably be your final thrust up. And it would coincide with earnings, because this would happen before the rest of all five or the remaining four FAAMGs report. Okay, the next one in that chart was just highlighting or updating this. I covered this in a recent video over last week, covering some sentiment indicators, and wanted to point out I did change one thing I didn't cover in the video here. Is that this double tap right here? I used a different color to color code the line because we fell just shy of that. The red line is my sell signal right here. And I showed you all and I also extended these arrows so you can see sometimes, and I did talk about that before, sometimes the drop is immediate, sometimes there's a little delay where the market continues to rise, but it's like somebody being shot. Sometimes you die right away, sometimes you run for a while and then you bleed out and then die, internal bleeding, whatever, and that's sometimes how the market works. Sometimes you get the double tap and there's a delayed reaction, maybe a month or so, sometimes days, sometimes weeks, and then other times, boom, 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 that's it. You get enough, and it was that second hit right there. This is, I talked about, that's shows you no indicator is 100% effective. That also came right on the heels of a big drop. But then this one immediate, this one a slight delay, followed by a 36% drop, and now we have boom, boom, 1, 2, double tap. No reaction yet. That's what puts me, not looking. I've moved away from looking, from a little another 5, 6, 7% pullback to now, as I've talked about recently, something well into the double digits is what I'm looking at this point in time. So again, it kind of plays into how you want to, if you wanted to, if you are short or planning to get short, where you might look to target. And if you're targeting, 10, 15, 20% or more downside, then you can allow yourself a little wider stop. And again, with earnings coming up, still quite a few big earnings in the next week or so here, maybe scale in. Still not an all-in short moment, unfortunately, as much as the evidence is continuing to mount that we're going to have a sizable correction. Next chart up was gold. Not much to update. This was that was from a week or so ago, the July 21st right there, and then I showed you that was a trend line I was watching. And then this was today's. This was the same trend line right here from July 21st, and I gave you this minor trend line today. So when that gets taken out, probably take us down to the trend line that I'm still waiting for the sell signal. This is where I plan to add to some gold shorts. I've started to just nibble minors. Oh man, there's some miners that are really setting up. I think we're setting up for a very nice tradable trend to the downside. And I've been bullish on metals, for a long time now. Gold's been in a bull market. It's still in a bull market, but we have hit my long-term bull market target, what I called my initial long-term target. I think gold will go up. I'm still at this point longer-term bullish, but intermediate to shorter-term bearish is how I would describe it. So I'm looking to trade at least a correction. Don't think it'll be the top, the end of the bull market, but I'm open to all possibilities. We'll see. But again, we don't have the sell signal yet. That was this morning. Let me give you the updated chart. Hold on one second. And this is it right here. This is that same chart, but a live chart. So this is the one we need to take. This is the minor trend line. Again, I think a break of this will spark a rally, drop down to the larger trend line. Probably buyers step in there, one bounce, and then a breakdown, and then a run down to my 18. We'll call that 1820-ish target, give or take, and we'll call also my minimum initial target. First target, I favor. I think chances are we'll get a bounce there and then continue on down to 1790 or so.
But again, and I have to say this because it bears repeating, this is a trade setup, a potential trade, not an actionable trade. No sell signals. Gold is in an uptrend. It's in a strong uptrend. We had some some pretty powerful stuff that happened recently, but again, everything I've covered in other videos. So let's move on. We'll look at silver, natural gas, and I think that's it, and wrap it up. Okay, the next chart in this morning's post was silver. Right here, a little crack below it. Silver's only going to go so far. It's not going to do this without gold going down. It's gotten ahead of itself. It had lagged behind, so it was playing a game of catch up. But these are my targets for silver. It needs to take out this trend line, this wedge type pattern. Let's take a look. And that's it. It's cracking. It's cracking, but it's not caving. Why? Because gold's holding up. But it is, you take it for what it's worth. It's a sell signal, it's just not a hard. That's not a very impulsive or convincing drop, but it's enough. I think it's enough to start it. I think we'll follow through down here. But the odds will go up substantially if gold breaks down. And so there's my targets. I think we come into this trend line, this area here. There's a target zone about 19,835 to here. I think what I think will happen, again, a little micro call, but I don't mind. I enjoy this stuff. Come down, probably, a little reaction there. Move through this trend line with a momentum fueled overshoot and kiss that 18,878 level and then recover it and hold in. So this is, again, where I'll be looking to not only cover, but reverse and go long if and when we get there. And, as an active trader, I might, game the whole scenario like that if the charts confirm. First things first, we have again, a questionable, not a very convincing sell signal, but one that may pan out from here. And again, if gold breaks down, that should help. And of course, a reversal in the dollar and the euro. And finally, last but not least, natural gas. Back on the 15th of July, I said we need to take out this downtrend. That would give us a buy signal on gold. At the time, I said the downtrend and that level would need to take them out with conviction, that 1786 level. And since then, we continued down. Again, that was the older chart from July 15th. Today's chart this morning was right here. And this one played out nice. Here's our downtrend line. So from July 15th, we never failed to take it out. We hit that trend line, continued lower, put in positive divergence on the PPO here. We had divergence at that point in time, but it didn't pan out for anything much more than this little move up to the trend line. But that divergence on the PPO extended, not the RSI, the PPO down here. And so that was your buy signal. First target 786. Next target 191, and boom, doesn't get any easier than that. There's your breakout, telegraphed in advance, nice and impulsive, everything you want to see. That was good for so far a move of about almost 5% in natural gas. We're holding up so far. The only reaction's been more so in time than in price. We could still pull back 50-50, but I'm still favoring a move up to 1910. That's a nice convincing breakout. Whether we do this, if we do pull back to backtest the trend line, that would be an objective long entry. I don't want to see that, and I don't prefer that, and I wouldn't be so crazy about it. It may pan out, but I think natural gas, it tends to move quick when it breaks out, and it can become more overbought than most people think. So leaning towards that way, even if we get a little pullback first overnight. So best thing to do is just trail up, raise stops at least to entry at this point. If you don't, if you're going for a back test and you're long, you're going to go underwater if you took it at the breakout today, because by the time we back test, we're going to be below the entry point. So food for thought there. And then run up to, again, either way, still favoring a move up to 191 at least, and maybe more. We'll see how the charts develop going forward. All right, let's wrap it up here and see what the rest of the day brings. But again, 4 of the 5 FAANGs still have yet to report. So I don't think we're going to see the market crater until at least 1 or 2 report, and then even then, how does the market react? Maybe there's some positive earnings and or reactions. Again, I don't care what the earnings are. It goes back to me when I look at something like Amazon, for example. They need to blow the cover off the ball. Amazon has rallied since the March lows. This stock alone has rallied 106%.
So how much of whatever they're going to report, no matter how rosy it is, you have to ask yourself how much of that has already been priced into the 106% rally from that point in time. That's how things work. So again, what's more important to me than the actual earnings or any guidance that they may or may not give is what the market's reaction is to what they report, meaning how it trades after that. And I put that line back. That's July 30th after the close. Okay, all right, we'll wrap it up here, and no need. I don't think there's a need for an end-of-day update. What I just gave you is probably enough. As I said, I don't think we're going to go down much more today because we hit support. If anything, probably a little rally into the close would be my guess. If anything big happens, I'll do another follow-up. But otherwise, we'll just pick it up tomorrow and see where we go. This has been Randy Finney with Right Side of the Chart. Have a great day.